Hi, I'm Joe Lowry Jr. with Lowry Financial Advisors, and this is Cale,
Hello.
my colleague and friend. We're going to talk to you a little bit today about the importance of having a diversified portfolio. January and now the first few days of February have been really turbulent for the markets, and it's just a good reminder that if you're overly concentrated in any one stock, you could experience some pain.
Well, what if you own a bunch of stocks? Does that necessarily mean you're diversified?
No, right? Because it means owning stocks across multiple sectors, multiple areas, even different sizes of a company can make a difference in your investment history. So we've been hearing a lot about certain stocks in the past several years that really became prominent because of the
pandemic darlings.
Yep. So what's been happening with those lately?
Well, a lot of people bought a bunch of these stocks that did really well during the pandemic, and so maybe you had a dozen or so different stocks and you felt diversified, but lately a lot of those have crashed in a very significant manner.
And when does that crash happen? What's the source of that?
Expectations. They're priced for perfection, and when they don't deliver on perfection, then bad things happen.
Yeah, a lot of prudent investors saw the performance of these stocks in 2020 and in many cases 2021, and felt left out, like they weren't experiencing all of this great growth. So we thought we would talk about what has happened to some of these companies since they hit their market peaks. Now, those peaks happened at different times. But anyway.
Well, first, for reference, I think we should talk about the major market indexes, or indices, if you will, and see how far they are down, just for comparison.
So again, as of February 2nd, the Dow Jones was down 2.2%, the S&P 500 was down 3.9%, and the NASDAQ was down 7.7%. At one point this year, the returns were a little bit lower, but we've had a recovery in the last 6 or 7 days.
Now, that's not ideal, but that's not going to kill anybody.
Exactly.
But let's see how some of these pandemic stocks have been doing lately in comparison to those indices.
Right. Well, we start with darling of many, Peloton.
Oof.
Down 85% from its peak. Pretty rough ride for those pelotoniers.
Another pandemic winner.
Zillow down 75% from its peak. Anyway, yes, lots of.
Where do you get your dog food, Joe?
I get it from PetSmart.
Well, that could be why Chewy is down
74%. Yep. And that one surprised me.
A lot of people, bought pets, and there's a big pet surge during the pandemic.
So I think the assumption was it's a no-brainer. Roku. Many of you have Roku sticks or Roku TVs, down 60% from its peak.
Oof. This was a hot IPO last year.
Palantir.
And now
Palantir.
not so hot.
Palantir?
Palantir.
Down 66%. This was one of the hot stocks of 2020, certainly.
And this was everybody's obvious choice because of all the video conferencing that was happening. Zoom
down 63% from its peak. We still use it quite a bit, but I think Zoom fatigue is a very real thing.
And again, it was priced to perfection. It kept putting up that continuous monster growth, which has slowed down.
Yep. And DocuSign down 60%. I love DocuSign, but apparently not all investors do. And I don't mean I love it as a stock, because of course, this is not a recommendation to buy or sell any of these stocks, just informational. NIO, Chinese electric car company, down 53% from its peak. And this is just one representative of a sector that saw a lot of excitement, but in some cases has not really been able to measure up to that.
And just a reminder, for comparison's sake, the major indexes are not down nearly that much. Not that buying these necessarily represents, proper diversification for your personal needs, but, again, the overall market is not being punished nearly as much as some of these names are.
So it's important to remember that there's always a risk and reward trade-off. If you choose to be concentrated in a small number of individual stocks, the potential growth is very high, but the potential losses are more significant than you would face if you were a more diversified investor across a variety of different asset classes, industries, geographies, company sizes, basically all the things that normally typify strategic asset allocation, which is the approach that we have and continue to favor. A reminder, this video is for informational purposes only and should not be construed as an offer, recommendation, or solicitation to buy, sell, or hold any of the securities mentioned in this video or any other securities. Your investment choices should be based on conversations with your financial professional, like us, and should always reflect your specific goals and situation. Thanks for joining us.
I'm having trouble understanding right now.
Rude.